Are we on the cusp of a monumental shift in global power dynamics? The actions of BRICS nations are sending ripples across the world. For decades, Western economies have largely dictated the global financial narrative. But that era may be drawing to a close. The BRICS bloc, comprising Brazil, Russia, India, China, and South Africa, has been steadily growing in influence. Their recent strategic moves are not just headlines. They are poised to send shockwaves through Western markets and financial systems. But what exactly is BRICS, and why is its growing power so significant now? Let's delve into its origins. The term BRIC was coined in 2001 by Goldman Sachs. Initially identifying these nations as emerging economic powerhouses, they officially formed a political grouping in 2009, with South Africa joining in 2010, completing the BRICS acronym. Their initial goals were to foster economic cooperation and address global challenges from a non-Western perspective. Over the years, BRICS has evolved beyond just economic discussions, growing into a significant geopolitical force. Their collective economic power and ambition have expanded, challenging the traditional unipolar world order. At its core, BRICS aims to promote a multipolar world, where power is distributed among several major poles, not just one. A key objective is reducing reliance on Western-dominated institutions like the IMF and World Bank and the US dollar. They also seek to foster South-South cooperation, strengthening ties among developing nations without Western intermediaries. These foundational goals set the stage for the recent moves that are now capturing global attention. One of the most significant developments is the expansion of BRICS membership. This isn't just about adding more countries. The inclusion of new members like Saudi Arabia, UAE, Egypt, Ethiopia, and Iran dramatically alters the bloc's profile. These additions bring significant strategic weight. Saudi Arabia and UAE are major oil producers, influencing global energy markets. Iran's inclusion adds a key player in the Middle East, further diversifying the bloc's geopolitical reach. Egypt and Ethiopia are crucial regional players in Africa, enhancing BRICS's presence on the continent. This expansion signals a clear intent to build a more powerful, resource-rich, and geographically diverse alliance. Another critical area of focus is de-dollarization efforts. BRICS nations are actively seeking alternatives to the US dollar. Initiatives to conduct trade in local currencies are gaining traction, reducing reliance on the dollar for international transactions. They are also developing alternative payment systems, aiming to bypass Western-controlled financial networks like SWIFT. These moves directly challenge the dollar's global reserve status, which has long been a cornerstone of US economic power. The strengthening of alternative financial institutions is another key strategy. The New Development Bank, or NDB, is a prime example. The NDB finances infrastructure projects in developing nations, offering an alternative to traditional Western-led institutions. It directly competes with the IMF and World Bank, providing loans and support with different conditionalities. This offers developing countries more choices and potentially less political interference in their economic policies. Finally, BRICS nations exert significant influence over commodity markets. Their collective control over resources is immense. With new members, they now control an even larger share of global oil, gas, and critical minerals. This gives them the potential for price manipulation or significant supply chain shifts, impacting global industries. So, how exactly could these coordinated moves by BRICS shock Western markets? The implications are far-reaching. Firstly, consider currency volatility and inflation. A decreased demand for the US dollar could significantly weaken it. This would lead to imported inflation in Western economies, as goods and services bought in dollars become more expensive. We could also see increased volatility in global currency markets, making international trade and investment more unpredictable. Secondly, trade realignments and supply chain disruptions are a major concern. BRICS is shifting trade routes. Partnerships are moving away from traditional Western allies, potentially isolating some Western businesses. This could lead to new tariffs or trade barriers, impacting Western companies reliant on global supply chains. Thirdly, commodity price shocks are a real possibility. BRICS's ability to influence oil, gas, and mineral prices is growing. This could lead to energy crises or raw material shortages in the West, disrupting industries and daily life. Fourthly, financial market instability. Reduced investment in Western bonds and equities could occur. Capital flows might shift towards BRICS-aligned markets, challenging the dominance of Western financial centers. This could lead to significant challenges for institutions in New York, London, and other traditional financial capitals. Finally, there's the geopolitical power shift. The erosion of Western economic and political leverage is a profound consequence. Increased competition for resources and influence on the global stage will redefine international relations. This isn't just about economics. It's about a fundamental rebalancing of global power. While these shifts present challenges, they also bring opportunities for both sides. For BRICS, the main challenge lies in maintaining internal cohesion and coordination among its diverse members. Overcoming economic disparities and political differences will be crucial for their long-term success and stability. For Western markets, the need for adaptation and diversification of economic strategies is paramount. This could mean exploring new partnerships and investment opportunities in emerging markets, including some BRICS nations. The global economic landscape is undergoing a fundamental transformation, driven by the assertive actions of BRICS. The potential impacts on Western markets are significant, ranging from currency volatility to geopolitical power shifts. This isn't merely a shift in economic power. It's the dawn of a new economic order. How will Western nations adapt to this evolving landscape? The future of international finance hangs in the balance.